Good morning, traders. This is Christopher Terry with the opening play video for Monday, December 15th. In our prior videos, we were looking at the S&P E-mini futures have formed an X, A, B, C, D pattern, and up in this general area, we had resistance. All right, we prior looked at the December contract. We're now looking at the March S&P contract. The swing high of 1212.25 is going to be a key area to watch on the way back up. That's going to be a resistance zone. From there up until around the 18 zone, you could just see some good information, sideways action. So that's going to be key to watch. So the daily chart has corrected, as we were speaking in the past, has corrected to the downside. Now we're watching the lower time frames to set up another pattern. I'm going to drag in the next highest time frame, which is a 4-hour chart. And what we are seeing now, let me pull this down a little bit further, pull this further to the downside, is, let me just redraw this, because when we change the contract, from December to March, this was changed. So just little edits right there. Okay, so we have an X, A, B, C, D, more of a crabbish type of pattern, where we hit key support zone down here. You could just see this whole support, and now we're getting a retracement back up. Does this mean that this is a bullish pattern? It means that the pattern was completed to the downside, and now we want to see what kind of bounce the market can get before it goes into the next resistance area. So what I'm going to do is show you how we're going to look for resistance. So we take the Fibonacci high down to the low. Okay, and that lays in your 38.50, 618, your 23%. And then we're going to look at this particular swing here. And we're going to look at this particular swing here. So how we're going to do that, and this is what you want to start doing, from high to low, that swing right there, we want to take this and draw it down. All right, and with that, we're going to get rid of everything but your 70 from your 886 and your 113. The 100% zone, that's important. We're going to watch that. That's a dash. All right, so right there, key area to watch, and that's emulating this move up. We're also going to watch this last retracement up. I'll show you how to lay in your levels. Definitely want to keep that. All right, and then you have your 100%. And we're going to make this, let's just throw a little color in there, a deep pink. And we're going to drag it all the way down. Okay, let's just fix everything to the right, extreme right, okay? So as you see, up in this area, 38% ties in around with this two swings that we have, 100%. All right, this is how I look at stuff. All right, so we're going to come in right in this general area, come right across. Any retracement back up to this area is going to set up resistance. What we would expect is the market's going to go give us maybe an ABC corrective wave pattern up. Something where it would look like this. Take the swing high, swing low, up, maybe this far, and then the next area would be a retest down, a higher low, and then a move back up again. Something like that. All right, it's not going to be exact, but something where we have an ABC corrective wave up into resistance. This whole area is resistance, so we can draw this across. All right, and it's just big area to watch now. So the market had put a top in place, had put a lower high, a lower low, and now we're looking to see if the market puts an even lower low. So if we stop going up here, for instance, say the market stops going up here and tests down again to new lows, we can have, I'm going to try that one more time. And we can have a pattern that makes new lows, right? And then up again into a key resistance zone, and then still looking for that lower high. So we have high, low, lower high, lower low, looking for another lower high and a lower low to start the process back to the downside because we had initial selling. That's about what I'm looking for going into the Monday this week time frame, where you have the 886 to 113 extension, a retracement to extension of this whole last two swings up, and that's a good price relationship. Also, it's a 38 to 50% retracement zone from market high to market low. And that's about all we're looking at. We're not going to look at any Forex tonight. It's just the S&P because of the type of move it made. We expect volume to start decreasing into the holiday mode as we're talking about. Our signal service members, we are purely working on testing right now. So I turned the signals off, and we're in the testing mode. I don't want to mess up the rest of the year. It's important that we prepare for 2015. We have some new products. We're going to be using the Russell 2000. What is that? I'm going to show you real quick. Let's just get rid of this chart. Let's expand this. And let's go down to the Russell. All right, I'm going to stop the video for a second, and okay, I fixed it, so I included the Russell. Here it goes, TF. Okay. And we'll pull it in there in a moment, and we'll go over it. Here it goes. This is the TF. This is the Russell. All right, the Russell 2000, which is the small cap index. And we find this market loves to move and loves to move big and fast. This is the S&P futures on steroids. Essentially, it's a real exciting market to be part of. And I guess it's collecting the data. Here it goes. There it goes. And this is obviously the middle of the night. So let's just go back to it a day. All right. And as you can see, it's an exciting market. Lots of movement going on. And as we're coming into the new contract, you'll see more and more data fill out. So we're on the weekend right here. Anyway, it's here it goes. Take a look. All right. The types of moves it makes, lots of action, lots of big moves. So something we're going to be adding for 2015. As I said, we can expect more of a decrease in volume over the next 2 weeks as the big traders, the big funds, everybody is starting to protect their profits for 2014 in respect of the holidays coming. So rock and roll. Catch you guys in the chat room in the